Hello to all. Thank you for joining us for another episode of How It's Done with the Milford Regional Chamber of Commerce. Today we have Matt Reith, who's here with Province Mortgage, and he's going to give us the lowdown on how to get a quality mortgage at a decent rate within your budget. So without further ado, here's Matt Reith with Province Mortgage. Hey, Matt.
Hi, Simon. Thanks for having me.
No problem.
So today, again, my name is Matt Reith with Province Mortgage. I'm a senior mortgage advisor at Province Mortgage. And today I just want to talk about some factors that influence your approval process. Okay. At Province, we are a residential lender here in the state of Connecticut, serving the whole state of Connecticut. Okay. And we cover purchases, investments, and refinances.
If I was coming to you for a mortgage today, what do you need to know about my income?
Okay. So there are four things that we look at. We look at income, credit, liabilities, and assets. For your income, it's pretty straightforward. Okay. For a W-2 employee, we just look at your income for that pay period. We generally like to get a 2-year history, but we can do it as short as 1 month. If you're self-employed, there could be some nuances because we use net income, that is after taxes, whereas the W-2 employee, we use gross income before taxes. So it's best if you're self-employed to come speak to me early so we can sort that out.
How early would be best to talk to you before I buy my house?
Especially now we're in tax time right now, I would say anywhere 3 to 4 months.
Okay. So seems pretty simple. What about my credit? How do you look at that?
Yeah, so credit is pretty straightforward. We pull your credit, and when we look at your scores, we pull 3 scores from TransUnion, Experian, and Equifax. Okay. We use the middle of those 3 scores. From there, we also look at everything on the credit report as far as liabilities go. Okay. So a liability is just on your credit report. I'm not talking about your cell phone bill or the gas bill. Okay. We're looking at things that are strictly on your credit report that factor into the debt to income ratio. This could be your car payment, student loans, things of that nature.
Credit cards.
Credit cards, yep.
Okay, got it. So I've heard about liabilities. What are those compared to what you've just gone over on my credit?
Yeah, so liabilities is just that. We pull it from the credit, and what that is, your liabilities are on your credit report. Again, we're not looking at utilities or phone bills. Okay. We're just looking at things that are on the credit report itself. That's the only thing we're looking at. Okay,
so it's not like I have 6 cats and I got to feed them. You're not counting on that.
No, we're not counting on that. Okay. If it's not on your credit report, we don't look at that.
Okay, so I have a question. Why would I not want to close any debts going into the mortgage?
Sure, and that's a great point, Simon. We generally don't like it when there's any new debt opened up, but closing new debt can also affect your credit score. So when you close an account, what that could do is lower your credit score. So right before someone applies, let's say they pay off a car or student loan, that can potentially lower your overall score, which then would affect the overall approval process.
It doesn't make in your head, it doesn't make sense, right?
Yeah,
I don't have this debt, and now my credit score goes down. But I'm not a credit score guy. So, so as far as assets, what do I have to disclose as far as assets that I've got?
Sure. So assets is just a big fancy word for how much money you have in the bank. Okay. I generally tell people, just give me what you're looking to use for the transaction. So if you have a retirement account that we're not using or another bank account that we're not using, I generally don't want to know about it unless if we need maybe some reserves. So the assets have to be sourced, meaning that I have to follow the money coming in to the bank account. So generally people just can't show up with $50,000 in cash. We have to move that into the bank account through a process, right? So that's why it's good to talk to me a few months before, because everyone's scenario is a little bit different. So it's important to understand that assets just have to be tracked and monitored, and I only want to see what we're using for the transaction.
Okay, so if my wife has money and I'm using my money, then I don't tell you about that.
We don't need to know about that. We don't need to commingle funds or anything like that.
Gotcha, gotcha. So once you have all my information, how do I go about actually getting the loan, and how much should I be putting down?
Yeah, and that's a great question. So that really depends on mostly what product you'll be using.
Okay.
So FHA uses a 3.5% down payment.
Got it.
Conventional, you can go as low as 3% down. There's also VA and USDA options, which are 0% down, meaning 100% financing. Those are for people who qualify for those, or if the property qualifies for USDA financing.
Isn't USDA what they tell you what good beef is?
Yeah. Yeah. So the state of Connecticut also has a program out there. It's the Connecticut Housing Finance Authority, commonly referred to as CHAFA.
Okay.
Within CHAFA, there are other programs out there that allow you to place down $1,000 or to roll in the closing cost into the actual loan program itself.
Are there restrictions on CHAFA?
There are restrictions on CHAFA, so it's best to talk to me about that because they do have a different bucket, if you will, in terms of what they would deem to be qualified, because it's a separate qualification.
Okay, I got it. So what's the best way to figure out how much house I can actually afford, rather than just saying, oh, I want that house and it looks great and I'm sure my kids will be great there. Maybe it's a little out of my price range, but I don't take that in and use my emotions to do it. So is there a formula I should use?
Well, there are formulas depending on the loan program that you're using, but it's best to see what's your monthly payment that you're comfortable with.
Okay.
I think that's a good starting point for anybody. We can do the formulas on my end, but as far as the formulas itself, it's best to, let's say, start with what you're comfortable with, and we can back out that math. And understand that every town has different taxes. Obviously, we love to, promote Milford.
Yeah,
it's always a great town.
And the taxes do keep going lower.
They do.
Thanks, Ben.
Yeah. It's just the best. My best advice is, go with what you're comfortable with, and then we can work out the details from there. And of course, speak with your financial advisor, and he or she can best, help you do some long-term monetary planning as well.
Can you tell me a little about Community Hero and what is that program?
Yeah, so Community Heroes program. I'm a Navy veteran myself.
Okay. Thank you for your service.
Oh, thank you. I appreciate the support. So what the program is for any military, that's active duty or veterans, police, fire, teachers, or healthcare workers. Anybody that meets that criteria, we give a lender credit or a discount on the fees as well. And I also have a team that also gives a discount from specific real estate agents to home inspectors, attorneys, and also my company is launching a new program that gives discounted rates to those community heroes as well. So if you fit one of those buckets, or if you're not one of those professions, give me a call and we can talk about how much savings there are. It's not a program you have to apply for. This is just people just trying to give back to community heroes.
Thank you, Matt. So now we all know how to get a mortgage and how it's done. If you want to learn more about other things and how they're done, please click on the subscribe button below and hit the bell to get notified when we come out with a new video, which we're trying to do about once a week. From all of us here at MRCC Squared and the Milford Regional Chamber, thank you very much for watching. See you soon.